Stop. Put your wallet away. If you're about to log into your brokerage account and buy silver because you think January was the bottom, you are about to walk into a kill zone. We just survived one of the most brutal months in precious metals history. January wasn't just volatility. It was a coordinated liquidity drain designed to exhaust your patience. But here's the problem. The herd, the sheep, are looking at the calendar and thinking, okay, new month, new trend. February is when the bull market starts. They are wrong, and that mistake is going to cost them everything. I have spent the last 24 hours analyzing the seasonality algorithms of the Bullion Banks. I went back 20 years. Do you know what happens in February? It is the month of the Fakeout. It is the month where they lure the bulls back in with a tiny green candle, make you feel safe, leverage up your position, and then they pull the rug out from under you one last time before the real move begins. This video is your shield. I'm going to show you why the price action you're seeing right now is a lie. We are going to expose the gamma trap that is waiting for you around February 14th. Do not buy a single ounce of silver until you understand the 3 charts I'm about to show you. The market is setting up a specific bear trap, and if you buy too early, you will be stopped out days before the rocket takes off. But if you wait, if you have the discipline of a wolf, you are going to catch the exact bottom of 2026. I'm going to give you the exact date, the specific 48-hour window where the smart money is planning to enter. It's not today, and it's not tomorrow. Why am I so sure February is a trap? Because I follow the liquidity, not the hype. Let's look at the calendar. Around the middle of February, specifically the week of the 13th and 14th, we have 2 massive events colliding. The CPI, Consumer Price Index, data release, and the monthly options expiry. In the financial underworld, we call this the kill zone. Here is the script the algorithms are running. For the first 10 days of February, they will let the price of silver drift upward. They might even push it past $24 or $25. This is the bait. They need to paint those green candles to trigger the FOMO, fear of missing out, in retail traders. They want you to think the correction is over. They want you to buy call options. They want you to leverage up. But watch the DXY, US dollar index. While silver is rising, the dollar is finding support. The elites know that the upcoming inflation data is going to be hot. It's going to be sticky. When that news hits the wire mid-month, the algos will instantly bid up the dollar. And because silver is priced in dollars, an exploding dollar acts like a gravity well, crushing the price of precious metals. This is simple macroeconomic physics, but retail traders ignore it. They fall in love with the story and forget the math. Now, let's talk about max pain. This is an institutional term you need to learn. The Bullion Banks, JP Morgan, Citi, HSBC, have sold millions of ounces worth of call options to retail speculators. These options expire mid-February. If the price of silver is high on expiry day, the banks lose billions. If the price is low, the options expire worthless and the banks keep the premiums. Do you really think they're going to let those options pay out? Absolutely not. They will use the hot CPI narrative as a cover story to execute a massive sell program. They will smash the price down to the max pain level, the exact price point where the maximum number of retail traders lose their money. This is why I am warning you. Do not buy the breakout in early February. It is a bull trap. They're going to pump it up, get you to commit your capital, and then on Valentine's Day, they are going to break your heart. They will flush the price, take your liquidity, and use your panic selling to cover their shorts before the real move happens in March. You need to be watching the open interest on the COMEX. Right now, it is too high. Too many tourists are on the boat. The wolf knows that the boat can't leave the harbor until the tourists are thrown overboard. That is what February is for. It is a cleaning event. So, if February is a trap, when do we strike? The amateur asks, what price should I buy? The wolf asks, when is the liquidity most vulnerable? Mark this on your calendar. February 24th to February 28th. This is what I call the post-op flush. After the options expire mid-month and the banks have stolen the premiums, the algorithmic pressure lifts. The artificial ceiling is removed, but usually right before they let it fly, they do one final stop hunt to clear the board. They will spike the price down hard to test the resolve of the remaining holders. That is your sniper shot. We are looking for a V-shape reversal on the 4-hour chart. Do not catch the falling knife. Wait for the knife to hit the floor and stick. Here is the exact setup I'm waiting for. I want to see the RSI, Relative Strength Index, on the daily chart dip below 30. That is the oversold territory where the algorithms switch from sell to buy. I want to see the spot premium at online dealers start to rise even while the paper price is falling. That is the divergence. That is the signal that the physical market is screaming enough. If you see silver dip into the low 22s or high 21s during this window, do not hesitate. That is not a crash. That is a gift from the banking cartel. That is the moment you back up the truck. Why late February? Because look at the macro cycle. March is historically one of the strongest months for precious metals. The industrial orders for the spring manufacturing season begin in March. The Chinese New Year holidays are over, and the Asian markets return with full buying power. By waiting until the end of February, you are positioning yourself right in front of a massive wave of institutional buying. You are buying the ticket after the crash, but before the launch. The sheep will be selling in late February because they are tired of the pain. They will say, silver is dead. And exactly when they sell, you and I, the wolf pack, will be there to take their ounces off their hands. Discipline. That is the only thing that separates the wolf from the sheep. The sheep feels the urge to click buy every time they see a green candle because they are terrified of missing out. The wolf sits in the shadows. The wolf waits. The wolf knows that the market is a device for transferring money from the impatient to the patient. This February, I am asking you to do the hardest thing in investing. Do nothing. Sit on your hands. Let the tourists chase the fake breakout. Let the gamblers lose their premiums on the options expiry. Watch the price drop. And instead of feeling fear, I want you to feel excited. Because every dollar it drops is a dollar of profit you are going to make when we finally pull the trigger at the end of the month. This is your wealth transfer moment. They are trying to shake you out. They want you to get frustrated. They want you to say, silver's a scam, and sell your stack to BlackRock. Do not give them that satisfaction. I will be watching the charts 24 hours a day. I'm tracking the liquidity flows, the dark pools, and the Shanghai arbitrage. When the signal turns green, when the February Trap is officially closed and the real bull run is about to begin, I will release a video titled, Red Alert, Buy Now. If you are not subscribed with the notification bell turned on, you are going to miss that signal. By the time you wake up, the train will have already left the station. Do not be a victim of the February Fakeout. Be a predator. If you are ready to wait for the sniper shot, comment the word patience below. Let the algorithm know that the wolf pack is watching. I'll see you on the battlefield.